Hey, Bulls and Bears, we're back with another dose of economic reality. Happy holiday weekend. This is a long holiday weekend. You are watching this on Memorial Day, or you may be watching it afterwards, but I'm recording this on Memorial Day. So, hope everyone had a great holiday. Hopefully, you enjoyed some time off, time with family, all those good things that come with the 3 day weekend, but not everybody. Some people are working the weekend, and I actually worked Saturday. So, let's start with that right here. My clients, and some of you may know, I do work in the financial industry. And some of you have asked about my services. Folks, I'm loaded. I'm beyond loaded up with clients. So the last thing I want to do is use this channel as a platform to send customers because I'm already overloaded with customers. And in the financial services, what I do is I look at people's financial situation, qualify them for reconstructive loans, ways to consolidate their loans, consolidate their debt rather. But I'm overloaded with that. But I can tell you what I'm seeing right now amongst my clients, people are begging for help. And with interest rates higher right now, a lot of these mortgage and the refinancing and a lot of these debt consolidation loans are not working out. They're not penciling out. So a lot of what I'm doing now, and I'm independent, so I can kind of take my own path on some of these cases. A lot of what people are doing now is they're reconfiguring their finances, right? So we go into their finances. What are your payments over here? What are you paying over there? What can you cut out from your life that you don't actually that you don't actually need, right? You may want it, but you don't need it. And a lot of people have trouble separating what they have to have or what they want versus what they need, right? You don't need entertainment. Now, some people say, "Oh, I need entertainment. I can't live without it," right? If I guess if you're an addict, just like anything, if you're an addict, then you have to have it. Otherwise, are you going to lose your mind if you don't have cable TV? Are you going to lose your mind if you don't take trips or travel and go on vacation? Right? Are you going to go insane if you don't go to 10 or 20 pro sports events a year? Are you going to lose your mind if you don't go to 3 or 4 concerts a year where concert tickets are between 70 and $120 now for a well-known artist, right? So all those things you have to think about amongst personal finance. But a lot of people don't want to draw that line between what they have to have and what they want because they're classifying what they want into, oh, this is what I need because I can't live without it. I can't go do my entertainment events if I can't travel and spend $5,000 a year on hotels and flights, then I'll go crazy. I'll go insane, right? This is an addict's personality. This is how someone hooked on a substance looks at the world. They say they have to do it, otherwise, these withdrawals, not doing it is worse than going in debt and doing it, right? So you see addicts, they steal to get money to pay for their whatever they're hooked on. It's the same thing with consumers and spending. They feel like they have to have these things. They have to do these purchases. They have to buy this, buy that, travel here, travel there. On that note, here's what's happening. Another record set for holiday travel over the Memorial Day weekend. 44 million people expected to travel. We'll see the numbers once the numbers are rolled up here in a few days. But there was more than 2.9 million travelers screened on airports just Friday, the Friday before Memorial Day weekend. And that set a new record. The record before that was the Sunday after Thanksgiving last year, 2023. So you may ask yourself, how are people continuing to be able to do this? Well, folks, it's pretty simple. Just connect the dots, right? It's debt. People are putting more on their credit cards, and the banks are still loaning out money. And you're going to be really shocked at what the banks are doing now. We're going to talk about that here in just a little bit, but they're keeping the credit flowing. They're keeping the spending going by allowing people to go further into debt, right? The credit is not being restricted. In fact, it's more loosening than it is restricting right now. All right, so we've got about 20% of the banks that are actually tightening. But when you look at the mortgage side of things, and we're going to talk about home prices here in just a little bit, you're going to be really surprised. And maybe some of you won't be surprised, but you're going to be really shocked at what's happening. And that's indicating that the housing market could really go on, this housing bubble and home price increases could really go on a lot longer than I think most of you expect, right? But before we get into that, you want to talk about consumers spending money they don't have to spend. They may want to, but they don't have to. They don't need to spend it, folks. Now we have flights for people with dogs. Air travel has gone to the dogs. Literally, here's what to know about Bark Air. This is NPR. Flying with your dog in first class may sound like a far-fetched, get it fetched? A far-fetched dream for many pet lovers, but a new boutique airline launching this week aims to make the White Paw experience a reality. So, folks, I could get into the article, but here's what people are spending money on. They're traveling with their dogs, and now we have an airline dedicated to flights for people with dogs, right? So this is, I don't know if you want to call it spoiled, but this is an example of the people that are out spending money. They don't have to travel with their dog. You don't have to have a pet. It's nice. Sometimes pets can be great companions, but when you look at the cost of owning a pet, it's not free. But some people, again, will say, yes, I have to have it. Otherwise, life's too lonely, right? So maybe someone will be depressed without their pet, and with their pet, they're happy, even though they can be expensive. Pets can be very expensive. And now you're traveling with your pet. I'd like to see how much these tickets are. Let me just scan real quick to see what the tickets are for the dog or for the pet. Here we go. It's also an expensive one. Bark Air flights between New York and LA cost $6,000 for one dog and one human. Wow. And that's under 50 pounds. If you have a bigger dog, wow. In each direction, one-way flights between New York and London go for, New York and London, $8,000. Wow. So there you go, folks. I mean, that's just one example of many different types of ways people continue just to spend money. And again, it's all propped up by credit. And let's now jump over to what's happening in the housing market. First, we're going to talk about prices. And prices have gone up compared to last year. We're still up year over year. The housing crash that some of these people have been talking about here, on YouTube and other places, hasn't happened. Home prices don't have to go down, folks. Just because they're high, home prices are high and unaffordable, they don't have to go down because you have the government backing most of the mortgages right now, and not just most. I just watched an interview over at Saks, the name of it, Saks Realty, and the interview was conducted there saying about 85% of mortgages being originated right now are rather government backed. So Fannie Mae, Freddie Mac, they're coming in and buying the mortgages, and it's mostly non-bank lenders. So it's not your Bank of America, your Wells Fargo, your Chases. It's your Rocket Mortgage, United Wholesale Mortgage, Guild Mortgage, lenders that are not banks. They specialize in mortgages. And you have the government basically coming in, government-sponsored entities like Fannie Mae, coming in and buying the mortgages. So therefore, these non-bank lenders, they now dominate the mortgage market. Again, about 85% of mortgages right now being originated are non-bank lenders. Why is that? Because they can loan out money to infinity knowing that the government's going to come in and buy these loans from them, right? So this is how bubbles continue to grow to get bigger. This is how the bubble got where it is right now, the housing bubble. This is how home prices got to where they are right now. Doesn't mean that it's going to pop. The only way it's going to pop is if they change the way that this money is being loaned out. If the government stops buying the mortgages from these non-bank lenders, you would see a home price implosion, right? The real estate market would crash. The home prices would crash. Is that going to happen? It's very unlikely. Do you think they're going to stop buying mortgages one day? Sorry, we're going to stop. We're going to let the housing market crash. We're going to let the entire economy come down, because when the housing market comes down, the rest of the economy goes with it. Do you think they're going to let that happen? Do you think they're going to just stop buying mortgages and say, okay, let it implode? It's not going to happen, folks. They're going to keep this thing propped up. They're going to find new ways to get people into homes. So let's talk a little bit about that here. And let me just read it right out of how Investopedia puts it here. Fannie Mae, what it does and how it operates. That way, I'm not just making this stuff up here. This is right from Investopedia here. There's a very good chance you've heard of Fannie Mae, but do you know how it operates? The Federal National Mortgage Association, FNMA, better known as Fannie Mae, is a government-sponsored entity founded in 1938 by Congress during the Great Depression as part of the New Deal. So back then they had to find new ways creative, for lack of a better term, creative financing. So it was a Great Depression sort of solution. And that's what we see with a lot of these um, programs that are implemented. They come in during times of severe financial distress. Look at 2020, all the programs that were put in back then that are still going now. In this case, we've got a Great Depression era program still going, and it's becoming more dominant. Again, over 80% of the mortgages originated now are backed by the government. Um, Founded in 1938 as part of the New Deal, it was established to stimulate the housing market by making more mortgages available to moderate to low income borrowers. Fannie Mae does not extend mortgages to borrowers, but it does purchase and guarantee them through the secondary mortgage market. The secondary mortgage market, those are the non-bank lenders, right? So not Bank of America, but Guild Mortgage, Rocket Mortgage, what did Rocket Mortgage used to be? They changed their name. Anyways, it's not important. Um, it does purchase and guarantee them through the secondary mortgage market. That reduces risks to the banks, making them more willing to loan money. So there you have it again. When there's no risk, when the bank knows these government backed mortgages are not going to stay on their books, they're going to loan out money, folks, even if people only have a small down payment. In fact, if you look at the down payments required right now, it's very, very low. All right, and let's just bring up a few of some examples out here. Fannie Mae introduces 5% down payment option for multifamily homes. Freddie Mac's proposed home equity product could unlock $850 billion in mortgage originations, folks. That's almost $1 trillion. That just came out a month ago. So now, instead of just primary mortgages, the government's going to be backing a huge amount of home equity lines of credit, right? So, folks, they're going to find ways to keep this housing bubble propped up. And that's why I continue to say it's going to be something huge to bring the markets down right now, the housing market, the stock market. It's a lot of this is just borrowed money in the background being pushed out into the economy, into the lending institutions to keep things propped up. So something big has to happen to stop this, folks. No lawmakers are going to come in and say, nope, no more government-sponsored mortgages, no more backing the banks. Folks, they're not going to do that. It's going to be something massive. We're talking about a World War III type of situation is going to have to come up, I think, to stop this. Otherwise, brace for more inflation, right? Again, probably the only channel here on YouTube to warn that the housing bubble wasn't going to go bust, that there wouldn't be home prices coming down like many other channels, some of them millions of views. And I'm here, this little tiny channel. And I say likely the only channel that's right or correct on this is because I don't have time to go out and watch the hundreds of different YouTube channels that talk about the housing market. But I do know the ones that I've watched, all of them predicted the housing market coming down. And I'm the only one that I know of saying that the housing bubble doesn't have to go bust because they can always find new ways to prop it up. Again, 2007, 2008, 2009, banks pulled back on the lending. That's why you saw the housing market start to come down. If they did back then, if they did what they're doing today, with the government-backed loans being about over 80% of all originations, the housing bubble would have never went bust back then, right? We would have still had a constant flow of new borrowed money to come in and buy up homes, right? And that doesn't even factor in all the investors buying homes, right? So you have to think about the big picture here when you're looking at this. And I know this is not good news for a lot of people. A lot of people want the housing market to come down. Then on the other side, a lot of people don't want it to come down. They're investors, or they bought a home in the last couple of years. You do not want to see, most people anyway, do not want to see your investment drop. I guess there's a few people out there that might want maybe lower taxes or something like that. So for that reason, you might not mind prices coming down. Or if you have a home right now and you're looking to buy a second home, you might not mind prices coming down. You might lose equity over here in your current home, but then you'll have better buying opportunities come up for new properties. All right. So speaking of the housing bubble, let's talk about some of the prices that are happening right now. Some of the recent prices here. Sales are down, right? Homes are very unaffordable right now, even with the easy lending, easy money happening right now. But the median home price nationwide is up 5.7%, from a year ago. Now, these are the April numbers. Of course, May, we don't have these numbers yet because the month's not done. Up from April 2023 to 407,600. That's up 5.7%. That's the 10th consecutive month of month-over-month price gains. Now, we're still down compared to the peak, which was August of last year. But when August gets here and we look at it compared to last August, right, year over year, will it be higher? The way that they're coming out with new products here, new ways to keep the housing market propped up, I'm not so sure we're going to see the housing market implode. But if the housing market doesn't implode, you're going to have consumers imploding because they can keep the housing market propped up, but consumers don't have an endless amount of money that can be borrowed like the government can. The government can borrow endless amounts of money. They just add it to the debt. Right? Look at the national debt. There's people out there that thought the national debt would get over 30, or they thought the national debt rather would not get over 30 trillion. Look where we're at. Right, it's endless, folks. It's endless for the government, but it's not endless for the consumer, right? So this is what you got to look out for. You got to look out for a consumer-driven economic downturn when the consumer gets tapped out. But then again, they can come in with all kinds of programs to halt foreclosures, to halt car repossessions. Look at 2020. You see a big enough crisis unfold, they'll come out with a lot of rescue packages, a lot of rescue programs, more propping up of this bubble, right? So, folks, this is definitely concerning. I'm still more wary of inflation than I am deflation. I wouldn't be surprised either way, but you want to prepare for both. You've got to be balanced right now. Otherwise, if you play the wrong hand, if you're all in on waiting for deflation or waiting for a crash and it doesn't happen, or it doesn't happen as soon as you expect, you might be in a world of hurt when it comes to your money and investing and your own personal budget and financial planning, right? So stay on top of all this, folks. Make sure you're subscribed to this channel because we're going into a very, very, I'd say, for lack of a better term, interesting time, the second half of 2024. And I've said this before, I think we're going to see some big things happen. We're already seeing it. Look at the new ways they're coming up with keeping the housing market propped up. Now we've got second mortgages that are going to be to infinity. There's no limit to the amount of mortgages they can buy. Why? Because they can always borrow more money. It's endless. It's to infinity. There's no limit. There's no ceiling. Are you guys starting to wrap your head around this yet? I hope you are. I hope you are, because I still see comments. They just don't understand. People down in comments, what's going on? Why aren't home prices coming down? What's happening? Why is this never ending? Folks, you've got to know the money is endless. They can create endless amounts of money. The government can borrow endless amounts of money. Why? Because the currency is just digits on a screen. It's not backed by anything. It can be created at the click of a mouse. It's not backed by gold. It hasn't been since the early 70s. It all goes back to the type of money that we have right now in our society, right? So if that were to change, if there were some laws implemented saying, okay, we can't create this money like we are, then that would be another thing that brings it down. That would be a black swan type of change, something so huge and structurally transformative that it would have to bring the markets down. But again, is any lawmaker going to do that and bring the market down? Of course not. So it's going to be some unforeseen situation that comes up. Again, World War III scenario, black swan scenario, that's going to be needed to actually change the direction of this market. When you look at inflation, right, they're trying to tell you inflation is slowing. Folks, slowing inflation doesn't help anybody, right? It makes it less worse than it would have been if inflation wouldn't have slowed. So that's like, let me give you an example. It's like saying it's 100 degrees and you have an outdoor job. You have to work out in the sun. Maybe you're in construction, landscaping, whatever. It's 100 degrees. So you're like, wow, I hope these temperatures don't go up anymore. 100 degrees is hot. The next day you get to work, it's 102 degrees. Like, wow, went up by 2 more degrees. It's even 2 degrees hotter today than what it was yesterday. And you're like, I hope this doesn't continue. So the next day, it's 103 degrees. It's hotter. But you got a coworker out there saying, oh, it's better because yesterday the temperature was up 2 degrees from the day before, and now it only went up 1 degrees. It went up from 102 to 103. So it's better because instead of going up 2 degrees, it only went up 1. But in the meantime, it's not better. It's gotten hotter. right? It's not as bad as going up 2 degrees again that day. That's what inflation is, folks. It's not getting easier. Inflation's not coming down. It's just the rate of increase is slowing down. Do you get it? Do you wrap your head around this? I think most of you do. Talk to your friends, talk to your relatives, neighbors about this. Let them know economic reality. Maybe share this video. Show them this video. Let them know the housing bubble doesn't have to bust. Look at all the things being done to keep the housing market propped up. You don't think there's people out there with jobs that depend on keeping this bubble inflated to keep this economy propped up? Of course, that's the name of the game. Keep their job until the next 2, 4 years, whatever their cycle is, folks. It's crazy, but it's reality. So thanks everybody for being here. Make sure you subscribe. Come back for more. Keep stacking. Bye for now, everybody. Peace.